Hi and welcome to this episode of GTP TV. Today I'm talking about charge rates and primarily looking at professionals in industry. We've had a few questions lately from clients that are starting out in consultancy businesses just wondering what sort of charge rate they should be charging for their business. We've been doing a few just back of the envelope calculations with them just to go through to give them a bit of a basis for where they need to be as far as a starting price. Now, one of the things is we're big believers in our firm of value pricing as opposed to working on a pure chargeable hour. But at the end of the day, as a bit of a KPI, it is good to have a figure in mind that you need to be working towards to know you actually are making a profit. Now, I've actually worked for an example here on the whiteboard, and I'll just run through it. So I'm just using a few just basic numbers. They're not actually any real case, but they'll illustrate for you where we're going with this. Firstly, I've actually started with the expenses for this business. And we've got car expenses of $12,000, phone of $2,500, subscriptions of $2,000, travel expenses of another $2,000, IT expenses of $1,500, admin of $2,000, also finally accounting fees of $2,000. Now those expenses add to an amount of $24,000. Now in this, my motor vehicle and IT expenses in particular, just looking at probably what the cash outflow would be as opposed to looking at depreciation and things like that of equipment, or working on the assumption maybe leasing equipment. Therefore, this would be the actual outgoing expense for you. The next main thing is that that's ended up coming to $24,000. So that's what we would expect the cost of running our business to be for the year. If you had a rental property or had to rent offices, yes, you might want to also include a figure in there for that rent. But one of the big things is to understand what sort of value you're going to put upon your own time. What money do you want to be making out of this business before tax? Now, my example here is I'm working on the assumption that this person could have, in industry, working for a salary or wage, earned $80,000 per year. Therefore, if we add that $80,000 to our 24, we come with that $104,000 of turnover they must achieve to be able to make a suitable wage comparable to what they would in their normal course of business working for an employer. Now, one of the next steps with that is we know what sort of income we need to make from our business, but then to break that down into an hourly rate. Now, it's not just a matter of dividing that then by 5 days a week and 8 hours a day, because we're going to make an assumption here that this person is going to take some time and where they're not going to actually be doing client work. So I've made the assumption here they would work for 48 weeks per year, working 4 days per week on work that they would actually be able to bill out to a client, and possibly about 6 hours a day they would be productive for. Therefore, over a full year, we expect this person to be productive for 1,152 hours. Now, if we divide that into an actual hourly rate, we end up getting a figure somewhere around $90 per hour. Therefore, they need to compare this rate to what their normal industry would be charging. If they're working in IT or something like that, their going industry rate may be $120 per hour. Therefore, they have plenty of scope to be able to charge more, or that maybe they end up working more on their business. But just for the sake of what I'm going through here, they need to be charging at least $90 per hour to achieve working at that many hours per week and spreading over the year to get their 1,152 chargeable. They need to be doing that to make their $80,000 in their pocket. So firstly, we're doing a budget of what our expenses are, adding in a cost for us, then working through how many chargeable hours they would work in a year to get to our hourly rate. Now, as a KPI to use for their business more so on a running basis, they might want to work this back to a per week rate. If they divide working this back into more per week, they're actually around the $2,166 per week they need to be achieving. Therefore, in those weeks where they are not on leave, that's the sort of figure they need to be achieving each week to know that they're actually making headway and making a profit. If they're getting nowhere near this, they may want to reconsider their business model, or whether they need to be doing some advertising or getting out there, or do they close up business and go and work for wages, which would be a lot less risk for them. But the upshot is, generally in business, you would hope that if you're in business, you're going to have a bigger upshot where, like as I was saying, if that hourly rate is well below industry, they've got the scope to charge more. They could actually be making a lot more than 80,000 per year. And that's what their aim of being in business for, is to make a good profit. A lot of this is focused, as I said, on someone like such as a consultant. You could use similar figures like this and concept using break-even points and things like that, knowing your gross profit margins to work back if you're a business that was selling goods, to actually work that back, or you were having consumables within your business which were in direct relation to what your income is. We've had some other YouTube shows on break-even points and things like that, so I'd say go and have a look at them. But by all means, go and have a talk to your accountant about some of this sort of stuff, just so you can work out what sort of charge rates you should be charging to know that you're actually making a profit in your business.